Oo, sige na. Wag lang lang. Tapos, na-record mo na na? I-record mo na. Okay. Hello, good afternoon. Now we will be discussing the two chapters. We have chapter 22 and chapter 23. I will begin with the PowerPoint presentation concerning terms to be defined and guidelines. And after that, we will involve problem solving. For every chapter, we have only one straight problem and for multiple choice problems. Some of these we will discuss. Those that cannot be discussed anymore, I will give you some guide, no, or the letter answers. Okay, so how do we define hyperinflation? With regards to PS number 29 on financial reporting in a hyperinflationary economy, in that case, no? In a inflationary economy. So for that purpose, we have providing statements that will guide us in the course of preparing our financial statements. Hyperinflation is a matter of judgment, and it's indicated by characteristics of the economic environment of a country, which include but are not limited to the following. A, the general population prefers to keep its wealth in non-monetary assets. Now we have to define this afterwards, or in relatively stable foreign currency. Accordingly, amounts held in a local currency are immediately invested in non-monetary assets or in relatively stable foreign currency to maintain purchasing power. The general population regard monetary amounts not in terms of local currency, but in terms of relatively stable foreign currency. Sales and purchases on credit take place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. Interest rates, wages, and prices are linked to a price index, and the cumulative rate over 3 years is approaching or exceeds 100%. Okay? Now, how about the financial reporting in hyperinflationary economy? PAS 29, paragraph 8 provides that the financial statements of an entity that reports in the currency of a hyperinflationary economy, whether they are based on historical cost approach or a current cost approach, shall be stated in terms of the measuring unit current at the end of the reporting period. And presentation of the information required under PAS 29 as supplement to unrestated financial statements is not permitted. The restatement of financial statements of an entity that reports in the currency of a hyperinflationary economy is accomplished by means of constant peso accounting and current cost accounting. So, PAS 21 defines monetary items as money held and assets and liabilities to be received or paid in fixed or determinable amount of money. So we now have your monetary items, money held and assets and liabilities to be received or paid in fixed or determinable amount of money. The essential features of a monetary item is right to receive, or an obligation to deliver a fixed or determinable amount of money. Monetary items refer to cash and assets that represent a fixed amount of pesos to be received, or obligations that represent a fixed amount of peso to be paid. Monetary assets, liabilities remain the same regardless of the change in the general price level. Now, on the other hand, we have the non-monetary items. The non-monetary items, by the process of exclusion, may be defined as those that cannot be classified as monetary. These are called non-monetary because their peso amounts reported in the financial statements differ from the amounts that are ultimately realizable or payable. The essential feature of a non-monetary item is the absence of a right to receive or an obligation to deliver a fixed or determinable amount of money. So we have some exercises that will allow us to distinguish or test whether we can identify monetary from non-monetary items. Now we go to the general price index. The index number used for restatement is known as General Price Index, constructed by the Bangko Sentral ng Pilipinas. Such an index is designed to show how much the overall level of prices in the economy has changed over time. An increase in the general price index means that the purchasing power of money has decreased. This is popularly known as inflation. So that is if there is what we call an increase, for that matter, an increase in the general price index means that the purchasing power of the money has decreased. And it occurs during a time when we have inflation. A decrease in the general price index means that the purchasing power of money has increased, and this is known as deflation. So we now distinguish deflation and inflation for the general price indexes. Now, specific price index is the change in the price of a specific good or service, such as food, clothing, and car. This occurs primarily, the change occurs primarily because of the change in supply and demand for a particular product or service. The law of supply and demand is in operation in the case of a specific price change. For example, if there is an increase in demand for cars, then the specific price of cars will tend to increase. So you have now your demand increasing. The specific price of goods or services may change at a different rate and even in the opposite direction from the general price change in the overall economy. So for changes in prices. Okay, now let's refer to some problems in the book that will allow us to understand these terms that we have just studied. So we have now in chapter 22, we begin from 22-1. I will have some of these problems explained, some that cannot be finished. I will just give you the letter answers before we proceed to the next chapter. The next chapter is chapter 23. Okay, so will you now refer to 22-1? The question is, what total amount should be classified as monetary liabilities. So we are now given the following liabilities in the statement of financial position that is at year end. So we are now referring to monetary liabilities, an obligation to deliver a fixed or determinable amount of money. So we have now your monetary liabilities, accounts payable, yes, accrued expenses, yes, bonds payable, yes, finance lease liability, yes. So we now have your total monetary liabilities. For the answer is B, 8,500,000 for the total monetary liabilities. The rest of the items, unearned revenue, advances from customers, estimated warranty liability, and deferred tax liability are not considered as monetary liabilities. For monetary liabilities represent obligations to deliver a fixed or determinable amount of money. So in this case, some of the figures given to us do not actually involve fixed or determinable amount of money because these other figures may be subject to change. Or may, let's say, unearned revenue, you know that we are referring to pre-collected revenue that may demand a return later on, the same with advances, and the rest are estimated liabilities. So the question gives us 8.5 million. In 22-2, we are asked to give the monetary assets. So the monetary assets include the right to receive. So we have now including cash and assets that represent a fixed amount of pesos to be received. So we have now fixed amount of pesos. What are to be included as part of your monetary assets? So we include cash in bank. We have accounts receivable to include, no, as part of the monetary assets. Cash, accounts receivable. Then we have advances to employees. So 2 million, 4 million, and 200,000 for advances to employees involve fixed amounts. So total classified as monetary assets is now in letter A. The other items, some of these are subject to changes in value, like net realizable value. Some may be amortized for a shorter period instead of a longer period stated. So we can say that these other figures do not represent fixed amount of money to be received. So we have now 22-2, letter A. We go to 22-3, involving answers. Question number 1. We have question number 2 and question number 3. Question number 1, the answer is letter B. That's for 6 million pesos. For letter B, 6 million pesos. Question number 2, the answer is C, 1.2 million. And question number 3, the answer is D, 1.6 million. So what amount should be reported in a hyperinflationary statement of financial position for land? So in question 1, we have the answer as letter B, 6 million. Okay, then we go to 6 million in its answer for 22-3. We have now 22-4. 22-4. Now, what are asked for in 22-4? In 22-4, question number 1, the answer is A. That's 5,150,000. Question number 1, the answer is A. In question number 2, the answer is B. 1,200,000 for the total liabilities. 1,200,000. And for question number 3, what is the balance of retained earnings after adjustments? So the answer now is letter B. Okay, I'm giving the final answers for number 1. What's the amount of total assets for after restatement for hyperinflation? So that's letter A, 5,150,000. How did we have 5,150,000? Your cash, if you restate, it's still the same. Inventory of 2.7 million, now we restate, and that gives us 3 million. By dividing our inventory of 300, okay, instead of 2.7, that gives us 3 million over 2.7 million. So the restated amount is 3 million. That will be the restated amount. And for the property, plant, and equipment, the restated amount is 900. The fraction is 300 over 150 or 2. So we multiply 900,000 by 2. That gives us 1.8 million. The total assets is 5,150,000. The amount of total assets after restatement for hyperinflation. Then we go to the amount of total liabilities after restatement. The amount of liabilities, current is still 700,000, non-current is 500,000. So that gives us 1.2 million, the same as the historical. So letter, question number 2, the answer is letter B. What in question number 3, what is the balance of retained earnings after adjustment for hyperinflation? So the answer to number 3 is letter B, 2,750,000. Actually, your retained earnings beginning is 2,350,000. Now, the balancing figure is 2,750,000 after deducting from 5,150,000 minus liabilities of 1.2 million and share capital of 1.2 million. Your retained earnings becomes the balancing figure, and that is 2,750,000. And by the way, your share capital is now subject to a fraction. The original share capital is 400,000. The fraction to be used is 300 over 100. We have the general price index at the end of 2020. So 300 over 100. That's why your share capital after restatement is 1.2 million. So your retained earnings now becomes the balancing figure for number 4. Okay, we go to 22-5. You are given the following historical income statement for 2020, giving sales, inventory January 1, purchases, inventory year-end, expenses, and depreciation. Sales are earned and expenses are incurred evenly throughout the year. Inventory was acquired during the last week of each year. Depreciable assets have a 5-year life and were acquired on January 1, 2017. So that was 4 years ago. The index numbers are 125 on January 1, 2017, 140 on January 1, 2020, and 360 on December 31, 2020. Now, in question number 1, what is the amount of sales after restatement for hyperinflation? The amount of sales after restatement for hyperinflation is equal to 7.2 million. The historical amount of sales is 5 million. Now we have to involve the fraction dividing 360 by 250. Dividing 360 by 250. So that gives us 7.2 million. 360. So we now multiply 5 million by the ratio of 360 over 250. That's the amount of sales. The second question is, what is the amount of cost of goods sold? So the answer for cost of goods sold is this time 4 million. That's letter B. B is 4 million. How do we find the cost of goods sold after restatement for hyperinflation? So we begin with inventory beginning. Beginning historical cost is 350,000. By the way, we create 3 columns: historical, fraction, and restated. Historical, fraction, and restated. We now begin with inventory January 1. The cost was 350,000. The fraction is 360 over 140. 360 over 140. So that's for 900,000. That's for 900,000. Ang iya nga restated. For purchases, we now get 2.5 million. Given is the amount of 2.5 million. And then we multiply by the fraction 360 over 250. We now get 3.6 million. 3.6 million. Adding and getting the total goods available for sale, historical is 2,850,000. Restated is 4,500,000. And then we deduct the inventory at the end of 500,000. Inventory end of 500,000 as given. But the fraction involved is 360 over 360. It's the end of the year. We are using now the index number at the end of the year. So we just multiply and get the same amount. So for the cost of goods sold, by using historical, it's 2,650,000 ang gross income, but the cost of goods sold is 2,350,000. Restated is already 4 million. Restated is already 4 million. So our answer is letter B. In number 3, the question is, if the entities operating in a hyperinflationary economy, what should be the reported net loss. Okay? The reported net loss is at the restated amount. So from sales of 7.2 million, we are going to deduct cost of goods sold. I am now looking at the restated column. So the gross income is 3,200,000. Under the historical column, that's 2,600,000. Now we deduct the expenses. For expenses, historical 2 million, for fraction 360 over 250. 360 over 250. So we now get the restated of 2,880,000. For the depreciation, 2 million, it's now 360, and we divide it by 125. That was the rate upon acquisition on January 1, 2017. So 360 over 125 multiplied by 2 million will give 5,760,000. In other words, we involve a higher and very high depreciation expense in the restated column. So the total of the expenses under the restated column is 8,640,000. Deduct this from the gross income of 3.2 million. The amount of net loss historical is only 1,350,000, whereas in the restated, the amount of net loss is 5,440,000. And as stated, sales are earned and expenses are incurred evenly throughout the year. And inventory was acquired during the last week of each year. So we are now referring to the inventory end acquired during the last week. That's why we are using the price index applicable to the end of the year. And we now have the index January 1 at 125, January 1, 2017, 140 on January 1, 2020, and 360 on December 31, 2020. Now, how did we get the 250? As stated, sales are earned and expenses are incurred evenly throughout the year. So in order to get 250 price index applicable to sales, to purchases, and to expenses, we simply add 140 and 360. So the total of 500, we divide that by 2 evenly throughout the year. So 500 divided by 2 is 250. I am now referring to the price index used for sales, for purchases, and for the expenses incurred other than depreciation. Okay? So we have now your answers to 22. That's 5 in connection with hyperinflationary economy. Okay, now we have 22-6. In 22-6, we have only one question. In 22-6, given the net monetary assets for the current year, sales, purchases, expenses, income tax, cash dividend paid on December 31. The sales, purchases, and expenses and income tax accrued evenly during the year. The index numbers are 110 on January 1 and 140 on December 31. What is the gain or loss on purchasing power? The gain or loss on purchasing power. So we now have 276,000. That's letter C, the loss on purchasing power. Okay, now let's try to compute for this. We now begin with 3 columns. First column, historical. Second column, fraction. Third column, restated. So historical, fraction, and restated. We begin with net monetary assets on January 1 for 880,000. For 880,000. When you have now the fraction by dividing 140, that's the year end, by 110. Because the index January 1 is 110 and we involve the net monetary assets on January 1. So restated is 1,120,000. So repeat, net monetary assets January 1, historical 800,000, fraction 140 over 110. So we use 140, that's year end. However, the denominator is the beginning of the year. So restated is 1,120,000. Next, we involve sales. Under historical, we have 3 million. Fraction is 140 over 125. Again, 125 is taken by adding 110, the beginning and the ending of 140. So we get 250 divided by 2. Since this item, sales, purchases, expenses, and income tax accrued evenly during the year. So beginning and ending price indexes divided by 2, sales, 3 million times 140 over 125. The amount of sales restated is 3,360,000. Next, for purchases in the historical column, negative 1,200,000. 1,200,000. The fraction is 140 over 125. So the restated is 1,344,000. Negative. So deduct. Expenses, original amount 900,000. Again, fraction 140 over 125. Restated is 1,008,000. 1,008,000. 1,008,000. Deduct from restated column. Then income tax 600,000. Again, we multiply it by 140 over 125. Restated is 672,000. As stated, income tax accrued evenly during the year. So the same with the other 3 items. Next, cash dividends. As stated, cash dividends, this was paid on December 31. So negative under the cost column, 200,000. The fraction is 140 over 140. Why? Because the dividends were paid at year end of the current year. So we again have restated of 200,000. The net monetary assets on December 31 is 980,000 at cost, but as restated, it's 1,256,000 based on the restatement column. So we involve a net loss on purchasing power equal to 276,000. That's why in number 6, it's letter C. Number 6, no? In number 7, that's 22-7. What is now the answer for the gain or loss on purchasing power? So our answer is 460 it's a loss. It's a loss. Given the monetary assets and liabilities, increase in net monetary assets are restated to constant peso. Decrease in net monetary items as restated to constant peso. And we have the general price index on January 1 and on December 31. Now we go to the solution. We have the monetary assets on January 1, 250,000. Deduct the monetary liabilities of 100,000. The net monetary assets on January 1 is 150,000. Next, net monetary assets on January 1 as restated, 150,000 we multiply by 300 over 125. So net monetary assets on January 1 as restated, 150,000 times 300 over 125. So we get 360,000. Then we add the increase in net monetary items as restated. Increase in net monetary items as restated is given at 3.5 million. So add it to net monetary assets in January 1 as restated. The total is 3,860,000. Then we deduct decrease in net monetary items as restated. We now have 3 million. The difference is 860,000. That is your net monetary assets on December 31 as restated. Monetary assets on December 31, 300,000. Monetary or 700,000, I'm sorry, monetary assets on December 31, 700,000. Deduct the monetary liabilities on December 31 for 300,000. So the difference is the net monetary assets December 31 at cost, that's 400,000. At cost is 400,000, but as restated above, it's 860,000. So 860,000 as restated, and at cost, it's only 400,000. So there is a loss on purchasing power equal to 460,000. That's letter B for number 7. Next, we go to number 8. In number 8, the question is, what is the gain or loss on purchasing power during the current year? So what is the gain or loss? And the gain or loss here, we have to compute from monetary assets, 5 million, monetary liabilities, 3 million. So we have the net monetary assets at December 31 at cost. So monetary, net monetary assets at cost, 2 million. And net monetary assets on December 31 as restated is equal to 2 million times 280 over 125. So 2 million times 280 over 125. 2 million times 180 over 125. That gives us 4,480,000 net monetary assets as restated. So we have a loss on purchasing power equal to 2,480,000. That's letter B. Then we go to number 9. The question is asking, what is the purchasing power gain or loss? what is the purchasing power gain or loss. So for the given data, monetary assets include cash of 250,000, accounts receivable of 500,000. So the total monetary assets amounted to 750,000. You exclude trading securities, inventory, and land. For the monetary liabilities, we only have accounts payable 1.5 million and mortgage payable of 500,000. The total is 2 million. So the net monetary liability is 1,250,000. The net monetary liability at cost is 1,250,000. As restated, the net monetary liability on December 31 is 1,250,000 times 300 over 120. So the net monetary liability on December 31 as restated is 3,125,000 taken by multiplying 1,250,000 by 300 over 120. Now remember, we are dealing with net monetary liability. In number 7, we involve net monetary assets. So that number 8 is the reverse. No, I mean number 9 and number 8. In number 8, we are asked for net monetary assets at cost and at restated amounts. In number 9, we involve net monetary liabilities. So, even though the restated amount is greater than the cost, but this is a liability, so the difference is a gain. Gain on purchasing power. That's the answer now is letter A. Okay, so letter A. Next, we go to problem number 10. Problem number 10, there are two questions in number 10. Question number 1, what is the revaluation surplus after the restatement? So question number 1 and question number 2, what amount should be reported as retained earnings after restatement? So it's now letter B. Let's start with the revaluation surplus after the restatement. Actually, we first begin with question number 2. What amount should be reported as retained earnings after restatement? So we now have your liabilities, 2.5 million after the restatement. Share capital, 8.5 million after the restatement. Total liabilities and equity after the restatement is only 16 million. So from 16 million, we deduct 11 million. The total, the share capital and liabilities, so that the difference goes to retained earnings. As stated, we have any revaluation surplus recognized previously is eliminated. Now, this is one of the principles given in our past number 29. Any revaluation surplus previously recognized is now eliminated. So meaning we eliminate revaluation surplus, so it is 0. It means that the balance or the balancing figure goes only to retained earnings. Okay, so that's now for problem number 10. In problem 11, we have one question. What amount should be reported as monetary assets. So we have now to include the following: demand bank deposits for 3 million, net long-term receivables for 2 million, and loans to employees for 300,000. The total is 5,300,000 for the monetary assets. Okay, we now go to 12 dash 12. 12 dash 12. For in 12 dash 12, we have only one question. And what amount of depreciation should be included in the 2020 income statement adjusted for hyperinflation? So in 12 dash 12, we first compute for the 2018. Okay? 2018 by multiplying 300,000 times 300 over 100. 300,000 multiplied by 300 over 100. 300 is the index number at the end of 2020. The index number at the beginning of 2018 is 100. So we now get 300,000 times 3. So you now get 900,000. Okay. The company reported the following: property, plant, and equipment. Year acquired 2018, percent depreciated already 30%. So meaning the remainder is 70%. 2019, percent depreciated is 20. 2020 acquired, percent depreciated is 10. And you are given the corresponding costs. Depreciation is calculated at 10% straight line. A full year depreciation is charged in the year of acquisition. There were no disposals in 2020. So a 10% rate, meaning the 300,000, the 3 million, you multiply that by 10%. So the acquired asset in 2018, the depreciation per year is 300,000. And the acquired asset in 2019 is 2 million times 10%. So you get 200,000. And that acquired in 2020 with a cost of 1 million, the annual depreciation is 100,000. So take note that the numerators are the index is the index number at the end of 2020. The computations vary only in terms of the denominator, because the 2018 acquisition, when the index number was 100, the 2019 was 125, and the 2020 was 300. So we now get 1,480,000. We now go to 22-13. The question is asking for the in a hyperinflationary statement of financial position prepared on December 31, 2020, what should be reported as carrying amount of the machinery? So our answer now is computed as follows. Acquired in December 2017. Okay? 2.4 million. That's 4 million minus 1.6 million. 2.4 million. We multiply by the price index at the end of the year, 350, and divide by the price index as of the year of acquisition. So 2 million, the question is asking for what should be used as the carrying amount of the machinery. So that's why we involve carrying amount for the asset acquired in 2017. 2.4 million times 350 over 120. So we get 7 million. The one acquired in December 2019, we now get 800,000. 1 million minus 200,000 is 800,000. Then we multiply it by 350 over 125. So we get 2,240,000. The book value as restated is 9,240,000. We go to number 14. Number 14, question number 1. What amount should be reported as total assets in a hyperinflationary statement of financial position? So we now involve the total assets. We create 3 columns. First, we have your historical cost. Second column, fraction. And third column, restated. Your question is about total assets. So total assets, including cash, historical is 2 million, restated 2 million. Trade and other receivables, historical 2.6 million, and restated is the same. Property, plant, and equipment is 4.6 million, and then we multiply by 280 over 125. 280 over 125 times 4.6 million is 10,800,000. So the restated amount, historical is 9.2 million, restated is 14,904,000. 14,904,000. So the answer is letter A for the total assets in a hyperinflationary statement. Number 2, what is the balance of retained earnings? What is the balance of retained earnings? So we now have our total assets of 14,904,000. Then we deduct trade and other payables, 1,800,000. We deduct share capital. The original cost, the historical amount is 4 million. We multiply it by 280 over 112. By 280 over 112. So we now get 10 million. We now get 10 million for the share capital. We eliminate revaluation surplus. So the total of the assets, 14,904,000 minus 11,800,000. The difference is 3,104,000. 3,104,000. That's now your retained earnings. And in other words, we are now using the balancing figure or the squeeze figure. For the answer is letter A. Then we go to number 3. What is the shareholders' equity after restatement? The shareholders' equity after restatement, we add share capital of 10 million and retained earnings, 3,104,000. So we have 13,104,000. It's still letter A. Okay, so we still have one more problem. And we have the straight problem so far. Next, we go to number 15. In number 15, the first question is, what is the total assets after restatement? So what is the total assets after restatement? Now we have cash, restated is still 100,000. Accounts receivable still 1.2 million. Inventory is still 800,000. Your land is 400,000. times 260 over 100. 260 over 100. So land is 1,040,000. Building is 1 million times 260 over 100. So it's 2,600,000. Accumulated depreciation, 100,000. Deduct. So we have now fraction 260 over 100. Deduct 260,000. Equipment, we have the historical amount, 500,000, and then we multiply by 260 over 125, 1,040,000, and accumulated depreciation, 250,000 negative, multiplied by 260 over 125. So restated is negative 520,000. The total assets now is 6 million taken by the following: add 100,000, add 1.2 million, add 800,000, add 1,040,000, add 2,600,000, deduct 260,000, add 1,040,000, and deduct 520,000. So we have 6 million. What is the balance of retained earnings after statement? Accounts payable, 600,000. Share capital, initially 2 million, and then you multiply it by 260 over 100. So your restated amount for share capital is 5.2 million. And we add 5.2 million and 600,000. Total is 5,800,000. Deduct it from total assets of 6 million. Retained earnings is 200,000. So retained earnings is 200,000. Why is it 200,000? Actually, your retained earnings is the balancing figure. And per shareholders' equity, that includes share capital and retained earnings. So you have 5,400,000 for the shareholders' equity. Okay? Now, the straight problem, which is a very long, which involves a very long solution, I will just, that's 22-16, i-post ko lang ang iyang solution sa straight problem. You find in the lower part of the canvas that area where you can find the solutions to the problem.